Now, this story has almost gone unnoticed. The price of silver has reached a 5-month high. A lot of silver investors got burned more than a year ago when silver got up to nearly $40. It subsequently tanked. It's been moving up lately. Of course, gold's also been on the rise over the past month, but both of them, remember, are well down from their record highs. Great to see you again, Michael. Thanks for joining us.
Thanks for having me on.
Well, can we talk about silver? You reckon there's more upside in silver right now, in part because you said supply is being crimped. Tell us about your bull case on silver.
Well, sure. As you pointed out, a lot of investors, if you came in at the wrong time, you could end up with very significant negative returns pretty fast. It's a tricky metal to trade, but I do think that the long-term fundamentals are very strong in favor of silver. I look at it really as a gold derivative. It's a noisy, volatile, if you will, but very valuable form of gold ownership. If you look naturally in terms of how much silver is produced each year through both mine production and supply, it's around 9 to 10 times more than gold. And a good chunk of the demand actually ends up what I would call as being sort of evaporated, meaning it goes into electronics and much of that never to be seen again, at least not at current price levels. So the above ground supplies and the below ground supplies of silver are very tight. Silver is mined primarily as a secondary metal to lead, zinc, copper, or gold, and therefore capital doesn't get allocated to it the way it does in other instances. So this very tight, very tight supply, in many ways tighter than gold. But really what's driving this broader rise higher is a cheap form of gold, and the investment demand story is very real for silver. The gold-silver ratio right now is around 51.5. My expectation is that will trend lower over the broader term, and in the very near term, I think it could go down to 45, which could mean a very powerful move up in the price of silver, and with or without an up move in the price of gold.
If an investor wants to choose one, though, whether it's gold or silver, which commodity would you say has more upside right now?
Right now, silver. I think both of them have upside, but right now, a time frame of between now and the end of the year, silver definitely has a higher percentage increase I'm expecting.
You say silver has this history of epic rallies. Why is that? Is it because it's a smaller and more liquid market?
Yes,
illiquid,
exactly. Yeah, it's a much smaller, nichier market. There's just not that much silver out there. One thing that's very important to point out in terms of the sort of the trade dynamics is that the speculative interest in silver, as it has for gold, has come in dramatically over the last compared to levels we've seen in 2010 and 2011. And so what happens is when silver starts to move, that speculative interest, the people trading the futures, will sort of turbocharge the rally higher. That can lift it very fast. But again, from a trade dynamic point of view, if you start seeing major price moves, you have to watch it technically very closely and take profits and be disciplined. You don't want to be the guy coming in there in the end of April at $48, expecting it to go to $65. You want to be very disciplined here, or you want to just sit on it and forget about it, hold it in physical or silver mining shares, and sit on it for 3 or 4 years, and I think you'll see very noticeable, uncorrelated positive returns that way.
Barrick Gold's new CEO, Jamie Sokalsky, calling for gold to reach around $2,000 within the year. And it was interesting. He made a point about central bankers actually now going from sellers to actually buying. How significant is that, and how does that play into the price of gold?
Well, that's a very significant point and a great one. Historically, meaning throughout a lot of the late 90s and the earlier part of the 2000 to 2010 decade, you had central banks being net sellers. Those were primarily developed market central banks selling gold per sort of a pre-agreed upon plan because they didn't want to sort of unexpectedly crash the market. So they had arranged that, but that's effectively stopped. And what's happened is that emerging markets where a lot of the wealth is being created, which also these emerging market central banks have almost minimal or no history of gold ownership, unlike the Western markets, have started accumulating gold. And if you look at the emerging market central banks, they've been very strong buyers. And noticeably, a lot of those is without the big guys like, say, China or India over the last 12 months. But so central banks have, on the whole, came in last year buying about 450 tons of gold. And when you look at the aggregate mine supply coming out, a ballpark of, 3,000 tons or so. That's a very important move, going from negative 400 to 500 tons of net selling to positive 400 to 500 tons of net purchasing by the central banks. On a related point, I'd also make the argument that developed markets that do have a lot of gold, I do not expect them to be selling any gold. They certainly haven't been since they stopped selling a couple of years ago. I think, that's an important incremental demand source, but I think you're also seeing, gold and silver being adopted as really a currency diversification strategy across a broad range of individual investors and institutional investors. And you're seeing that in the ETF holdings as well, where the ounces held, despite the price volatility we've seen over the last year, has continued to, steadily grind higher.